All right, welcome everyone. Welcome. Good morning to everyone watching this upon upload. Um, but yeah, it is I, Coach Andre from Bear Bulls Exchange, a subsidiary of Bear Bulls and Pips. Yeah, and I'm one of the coaches representing from Bear Bulls and Pips, Coach Andre, and I'm here with you today to just go through a little bit of like market um, analysis as well as just a little bit of psychology and what I sort of went through throughout the week. I just wanted to share with you guys. So firstly, oops, let me just move that there. Firstly, I just wanted to speak about a lot of the psychology aspects when it comes to trading. I think oftentimes as traders, when we face times of tilt, um, it gets to a point where you sort of become this character that you told yourself you wouldn't be. In a sense, like your alter ego, exaggerated alter ego, where you're just sitting there and you're like, okay, cool. I want the market to move this direction, and if it doesn't move this direction, then that means I'm not wrong, but someone else out there is manipulating things in such a way that makes me wrong. So someone is in a sense stealing from me, and I feel like it's the human nature to sort of feel that way, to feel like when your money is taken and you can't really get it back like that, you have a sense of, I don't know, it's like they robbed you in a sense, you know what I mean? You feel like something valuable, a prized possession, has been taken from you. And a lot of the times, as human nature and instinct, we sort of act in some form of rebellious way. We tend to want to fight back, and have that fire fights fire mentality. And I mean, sure, I guess, but I feel like from a maturing aspect, you really understand that, okay, cool. These are the markets, and the markets operate the way the markets would operate, right? And nowhere am I in a position to say, I want the market to move this direction and it will move this direction because I say so. And that's where we lose the plot, ladies and gentlemen. That's where we lose the plot because we think that the market behaves from an emotional perspective the same way we do, forgetting that all of this is just algorithmic. Yes, a little bit of emotion will be intact, but if we want to speak about the synthetic market in specific, it's all just logical, not emotional. And I feel like as people, we just look at the emotional aspect of things and sort of forget that, you, in a sense, need to act in a systematic way, a systematic approach. Um, which comes to the basis of my whole conversation about psychology. What I'm trying to say is that I feel like as people, we really need to get to a point where we incorporate systems, and develop systems that will help us not only conquer our psychological battles, but also allow us to have some form of comfortability within this market that everyone deems so, I'd say, demanding, and complex. People treat trading like flying a plane. I don't know why, but that's just how it is. That's really how it is. And with that type of mindset, I feel like we could really go a long way. Just developing a system for your trading, developing mechanisms that allow you to sort of have an edge. Those things really play a major role, ladies and gentlemen. They play a major role. So earlier on this week, I faced some form of tilt, guys, where I started the week off in a very great manner. I think I was up a little over 13% on my account. So, everything was really looking good from there, and I don't know. I would say interest really got the best of me. Interest in external things aside from seeing my system work really got to me, and I just went into tilt. I started hitting break even after break even. Started losing trades as well, and it was getting to the point where it was frustrating me. You know what I mean? And it was at that point where my professional self sat me down and was like, "Yo, my man, look, you being too hard on yourself, and you doing that thing again where you letting external factors determine your perspective of the market. Stop doing that." And acting from the emotional aspect of human nature and human psychology, I didn't really pay attention to that, and that's what really costed me, especially towards the end of the week. That's what really costed me, and looking back at it now, well, it didn't really cost me that much, but it did cost me from an emotional perspective, because you find yourself very anxious. You find yourself very, patterns of breathing begin to change. You find yourself forming bad habits as well. And all that is just due to not being able to systemize yourself and get yourself in routine like manners. You understand what I mean? And yeah, that's really it. I feel like it's important to be just to systemize your approach to trading, guys. Systemize your approach. Make sure that you have a system. Make sure you have something that you trust. Make sure you have something that you can lean back onto when times are rough, when times of tilt are there, and you don't know what to do. You can just go back and refer to your previous work, and sometimes even just looking at it, looking at previous screenshots, looking at previous setups, as well as journaling, going through your journal. Things like those can really spark something in you, to like want to do better and want to follow your system, especially if you have a system already, but just choose or fail to follow it. Especially for those people, having a trade journal, going back, looking at yourself, reviewing at the end of the week could really go a long way. And that's really what I've learned, and that's what I'll be incorporating going into this week as I do my sort of pre-market analysis. It is Sunday, the 11th of August, as I'm filming this. So yeah, I'm just looking at a little push up from volatility 25 here, where we have this volume pool, slash AOI slash order block, however you want to call it. I have it resting just above this high here that was predominantly purged through but failed to fall into the area of interest, um, as well as making that sort of sharp movement to the downside to then come into this area to sweep liquidity here. Understand? So with liquidity being swept here and price having fallen into what I'd call a order block AOI, and having this sort of push up impulsively could tell me that okay, price came from up here, shot all the way down, but said, I don't think I can reach this low while these sellers are still in the game. So I might need to do a little something, you know what I mean? And obviously then now we get this sort of correctional movement back up here into this area, which could be swept as well, because look at this as your internal highest high, if you want to put it that way. This is your internal highest high, and then that would obviously be your area of liquidity where stop losses will be resting way just above. And how ironic that the stop losses rest just where there's volume, which are orders, stop orders, stop losses, all of those would be resting above this area. So a push up into this area would be quite likely. It would be something I would really like to see, but right now this is how the entry markup would be if this were to be an actual entry. This is how it would look, and would pretty much be in good position right now. And of course, we map out the mid range of that. Let's say maybe take profit there to maximize profits, of course. That day we get the consequence encouragement. Have that there. Bam. And then what this tells us is that if price manages to push into this area, and please note this sort of high here, which of course we see as a drawn liquidity. A lot of the people that I teach this, I say is a drawn liquidity. Uh, Others would probably call it buy side. Understand? So obviously we have this buy side resting there, so we know that as well as the 50% range resting near the buy side, we understand that okay, price could make a pretty decent run into this area before maybe consolidating here. Oopsie, hold on. Let me just get that. Yeah, price may do this little run into here and then maybe consolidate and then maybe take out a few people here to then maybe push back up there. That's the sort of movement we could see. And to sort of manage this, obviously, we'll then have what? Stop loss and break even because we'll know that, okay, price has made this run into 50% of the range. So anything could happen. So let's prepare for anything that could happen. Because we understand at the end of the day, all of this analysis, all of this is all just an hypothesis. It's not proven. As much as the trade would be in profits, as long as you haven't hit your target, it's still a hypothesis. It's not proven. You understand? But congratulations, especially if you could shave a few points off the board by taking a couple of partials. That's a good trade in my books. So yeah, but ladies and gentlemen, that is it from me, Coach Andre from Bebos and Pips. I hope you guys enjoyed today's episode. Make sure to stay tuned for many more. And I don't know whether in the link in the bio or within the video, the YouTube video, or on our page bio, you'll find the link to our free Telegram channel as well as the Bear Bulls Exchange Telegram channel where all is free. And it's pretty much just a community where we could just share ideas, and sort of build brands, build businesses together, and just elevate as people, because at the end of the day, what we're doing at Bear Bulls and Pips is just inspiring success. You understand what I mean? So yeah, that is it from me. Hope you guys enjoyed. Ciao.